TwoMinFinance Week in Review, July 20th through 24th, 2026. Tech and AI spending fears led a broad pullback. Educational only, not investment advice. All major U.S. indices finished lower. The S&P 500 slipped about 0.6%. The Nasdaq dropped roughly 2.1%, the clear laggard. The Dow held up better, down about 0.4%. Small caps also lost ground. Volatility briefly broke above 20 intraday before settling, a sign of caution, not panic. Oil was a macro shock. Middle East tensions and energy corridor risk pushed crude higher, WTI back over $90, Brent near 97. Higher energy prices support the dollar and lift inflation expectations, which pushed Treasury yields higher. That matters ahead of the July 28th and 29th FOMC meeting. Investors will parse every word on energy-driven inflation even if rates stay on hold. Midweek, Alphabet delivered a strong quarter. Revenue about $119.8 billion, up 24%. Google Cloud jumped 82% to roughly $24.8 billion. But investors focused on spending. Second quarter capital expenditures hit about $44.9 billion, and full-year guidance rose to $195 to $205 billion, up from $180 to $190. Shares fell about 4 to 5% after hours despite the beat. Tesla amplified the AI spend narrative. Revenue hit a record near $28.2 billion, but adjusted earnings missed, about 33 cents versus roughly 50 cents expected. Operating margin compressed to about 1.4%. Free cash flow turned negative near $1.1 billion as Capex jumped over 140%. Management reiterated more than $25 billion of full-year capital spending for AI, Robotaxi, and Optimus. The stock tumbled roughly 12 to 14% the next session. Also Thursday, Intel. Revenue $16.1 billion, up 25%, strongest growth in about 15 years. Non-GAAP earnings 42 cents, roughly double estimates. Data center and AI jumped 59% to about $6.3 billion. Texas Instruments also printed $5.46 billion revenue, up 23%. Contrast with Tesla, chip sellers showing demand, while big spenders got marked down on cash flow. Under the hood, this was a rotation week. Energy and utilities outperformed as oil rose and investors sought defensive cash flows. Communication services and consumer cyclicals lagged. The market message was clear: AI demand is still real, cloud and Intel data center growth prove that, but investors are separating companies that sell infrastructure from those spending aggressively to chase it. Next week is packed. The Fed meets Tuesday and Wednesday. Meta and Microsoft report Wednesday. Apple and Amazon report Thursday alongside Q2 GDP and inflation data. The educational takeaway: strong top-line AI growth can still get sold if capital spending rises faster than investors expected, unless you're the chip seller filling the orders. This is educational market news only, not financial, investment, tax, or legal advice. Thanks for watching TwoMinFinance.